Roblox was one of the prime beneficiaries of lockdowns during the pandemic. With schools closed, the company added tens of millions of new daily active users. Surprisingly, growth continued for this Metaverse stock even after the economic reopening. In this video, I'll review Roblox stock across several financial metrics including revenue, cash flow, profit margin, the future prospects, and valuation to determine if investors should buy Roblox stock today. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. Starting with revenue, you can notice that trend I discussed in the introduction. Roblox revenue soared in the aftermath of the pandemic, but even during the reopening, after just a brief period of flatlining, the revenue growth resumed. $3.16 billion in revenue for Roblox during the most recent trailing 12-month period, and that's more than triple the level the company was at in 2021. Interestingly, this revenue number is a rather conservative revenue number for Roblox because of the way the company accounts for deposits. You see, Roblox is free to join, and you don't have to spend any money on the platform. But for some users, if you want to gain access to special items, you can put money on the platform and purchase the currency called Robux. Roblox doesn't account that as revenue for 24 months. Well, what I should say is Roblox splits up that deposit into revenue for 24 months. So if a player deposits $240, the company will recognize $10 per month in revenue over 24 months until that full $240 deposit is accounted for. But that's not really how players spend the money on Roblox. If you have children that use Roblox and you've deposited any money for your kids on Roblox, you'll notice that it doesn't take them 24 months to use up that deposit. They use it up more quickly. So Roblox's accounting standards are conservative in the reporting. So revenue is actually lower than what it would be if their accounting was a little bit different. Profitability is a little bit lower than it would be. All the metrics that are related to the way it accounts for those deposits are reported lower for Roblox. That's why when I'm evaluating Roblox, I look at cash flow as a more indicative, informative metric than profitability. And you can see profitability is negative 38% operating profit margin. It's been improving, but it's negative, and it's significantly negative, primarily because of that unique way the company accounts for those deposits. And then they also use significant sums of stock-based compensation. So those two factors together combine for this negative operating profit margin. It is improving, which is good for Roblox stock investors. Now, I highlighted the cash flow is more informative when you're evaluating Roblox because of the factor I mentioned about how it accounts for revenue. And cash flow is sustainably positive and improving again. You can see during the pandemic, it absolutely exploded. People were depositing and they were adding tens of millions of new customers. The company was thriving during the pandemic. Now, the cash flow from operations is the metric that decreased in the aftermath of the economic reopening. While they continue to add millions of new players, they continue to add revenue, but the cash flow from operations worsened during the economic reopening. That's the one metric that really suffered because of that trend, the reversal from the stay-at-home business model, and then when they had to adjust through economic reopening. Still, they maintained it positive, sustained it, and now they're growing it again at 20.47% of sales. Now, looking ahead, the analysts on Wall Street that are following Roblox stock, they expect it will grow its earnings per share by 10% each year over the next 5 years. I think this is a conservative outlook. I would wager that its growth would be faster than 10% over the next 5 years. But again, this has to do with the accounting of the company, and I would be looking more towards its cash flow growth rather than its earnings per share growth for the next 5 years. Looking at the company's balance sheet, what I have here is the net total long-term debt. This is long-term debt minus cash, and so a negative number means it actually has more cash than debt. And so at 1.4 billion, Roblox's balance sheet is in excellent shape. It has $1.4 billion more in cash than it does in long-term debt. So not only is the company generating cash flow from operations sustainably, it's also got a healthy balance sheet. Both are excellent factors when you're looking at a growth stock, because that means they're in position to capitalize on growth opportunities. Their balance sheet can be utilized, for instance, if there's an acquisition opportunity or if there's a big, massive investment they can make to grow. They can do that because the balance sheet is healthy and they have borrowing capacity. And finally, I wanted to look at valuation. And Roblox is more, it's better to value Roblox on a price to free cash flow basis. Again, because of the factor I mentioned earlier, you want to take everything to cash flow with Roblox. That's the more informative metric to evaluate. And Roblox is trading at a price to free cash flow of 66, which is not cheap, which is on the expensive side, given the company's growth forecast and growth prospects. Now, the company does have some catalysts for growth that I didn't discuss. More than 90% of the users on the Roblox platform are free players that have never deposited money. Roblox is working to monetize those players through advertising. Now, it's in early days of that, and once it ramps that up, it can really harness the monetization of the platform, because so many of the players never end up depositing any money. They just play for free. And so Roblox has to take steps to monetize those players. I don't think the platform can grow when more than 90% or 95% of the players will never deposit any money. You've got to have a monetization strategy for those players that will never deposit money. And I like the ad-supported model here. I like that they're working to implement more advertising, more sponsorships on the platform. Now, I've had Roblox stock rated as a hold, and I last updated that recommendation on May 9th. And so to answer that question again today, after revisiting the company and reevaluating their important and critical financial metrics, I would say the stock is still a hold. The valuation is a little too rich for me for Roblox, even though the company's heading in the right direction. I like the business model. I like the strategies they're implementing. It's just a little too expensive given their growth profile right now. Hey everyone, if you like watching my videos, then I've added a great complimentary product just for you. I've created a book. I've written a book that's available for sale now that highlights my 6-step investing framework. Even if you don't follow that investing framework, just reading it and knowing how I evaluate stocks will make it a lot more interesting and informative to watch my videos. I've added the link in the description below.